Hey, welcome to this month's monthly market report for September 2025. I'm David Childers, and if you followed along with the monthly market report, you know exactly what's happening in this market. So I'm going to do a couple of things today. First, we're going to talk about some of the economic uncertainty and how it's affecting real estate right now. And then two, we're going to talk about every major downturn in the last 5 decades and what's happened in our business. Maybe not even downturn, maybe the right word is drought. Just like what we're in right now, and give you some perspective on what's ahead. So we'll do that. We'll wrap up as well with Kate Rezebeck on our team, talking about the most important conversation you can have right now. And with that as a backdrop, let's go ahead and get started. All right. Mark Zandi said this: the risks are increasingly high that we're going into a recession. We're not there yet, and maybe this thing gets turned around, but that's increasingly becoming hard to do with each passing week. So, I'm not here today to say we are heading in a recession. I'm here to say this is what's being talked about in the media right now, and we need to understand it. We need to understand the implication and the impact on housing so that we can guide clients forward, effectively. But the reality is there are a couple reasons for this. First, inflation remains elevated. The Fed has said they want inflation to be around this target of 2%, 2.9%. And some have said, look, we're not going to get down to 2. We're going to kind of hover in this area. But that is a fact that inflation remains elevated, and it remains above where they would like it to see. Michael Strain said this: I think the worst is yet to come when it comes to tariff-driven inflation. I think over the next few months, we're going to see more and more evidence of the tariff showing up in inflation. There's certainly many schools of thought and effectiveness, non-effectiveness of tariffs, all of that conversation out here to sort of debate that. But you think inflation being a little bit higher, you think the talk of tariffs certainly could drive inflation in a transitory way in the economy. That certainly is something that the Fed is watching. And unemployment has held steady. Most recently, 4.2% unemployment rate in this country. Still relatively good, I think, when you think about historically. But what is the underlying pin of this? Is there are some cracks in the labor market. Job growth is sort of stalling out. We're certainly not seeing the job growth that we've seen. So these are all the reasons I'm trying to make the case for why it's being talked about right now in the media that we could be heading towards a recession, like what Mark Zandi said, increasingly heading towards that direction. The reason why I bring all this up is because these are the things that consumers are thinking about right now. How do I know that? Well, this right here, LendingTree just did a study. 2 in 3 Americans think a recession is coming. 74% of Americans admit that world news or current events affect their financial decisions. Oh, by the way, it affects their decision on a major purchase like housing, other things as well. But that's the sort of climate that we deal in economically. And many people looking around going, okay, what's going to happen here? We have to take that into account and meet people where they're at and how they're understanding. But I think an economic dip can bring opportunity, but you have to be careful. You have to know how to navigate it. So let's talk about what could be on the horizon for the economy, how that's affecting the housing market right now, and even some things that are already in place that are affecting the housing market that we need to be aware of. So right here with Redfin, Daryl Fairweather does a great job as a chief economist. The Fed is in a tough spot. Some argue that a weakening labor market, it's time to bring rates down. Certainly, we've heard that. Other points to rising inflation say a rate cut is misguided. So you have people on both sides of the camp there. The most likely scenario, the Fed will cut rates to stabilize the labor market, viewing any inflation from tariffs as temporary or transitory. But if that assumption proves wrong, we could be looking at rate hikes again in 2026. So what the Fed is essentially saying is, we think a little bit of inflation will happen from tariffs. We think that will sort of move through the economy be temporary. But this sort of weakening in the labor market is leading to a Fed rate cut. 91%, according to Wall Street, 91.7% probability of a September this month Fed rate cut. Now, this is not the 30-year mortgage rate. This is the Fed funds rate. Hopefully, you know that. You watched the monthly market report before. But even right now, the Fed has an impact on mortgage rates. Even the market that we're in, the average 30-year fixed around 6.5% right now. This rate cut is already priced in. We've already seen a little bit of relief in mortgage rates, basically with investors assuming the Fed is going to cut the Fed funds rate in September. So don't expect a big swing in the market. We'll talk more about this in coming monthly market reports, but we're watching the spread right now. That's come down. And we want all these things to point to a little bit better mortgage rate environment. Go back to Daryl Fairweather here from Redfin. Today's mortgage rates already have anticipated September Fed rate cuts are priced in. That means when the Fed officially announces a cut, we shouldn't expect a significant corresponding drop in mortgage rates, just like I said. So Wall Street's sort of looking at the Fed saying, okay, what are you going to do? The housing market's looking at the Fed saying, what are you going to do? And ultimately, I recorded a video this morning. It'll be on Instagram where the average mortgage payment going from May this year until right now in September has dropped by about $250. That is a good thing. You see the decline in mortgage rates after the weak jobs report and sort of this assumption the Fed is going to take action. We want to pay attention to that, but it's good things for borrowing rates right now, and we want to see that continue as we go throughout this fall season and more and more people after the summer maybe jumping back in to looking for a home. Matter of fact, if you look at the CME group, that's sort of the place that most Wall Street investors go to say, okay, what's going to happen with the Fed funds rate? 2 cuts is the odds probability right now for this year. So as we start to think about that, it gives you a little bit of perspective on, what Wall Street is thinking about Fed cuts. So we could see a little bit more relief in mortgage rates. I don't think we're looking at forecasters say we're going to see a massive change in the 30-year fixed mortgage rate. But we pulled this right here from Fannie, from MBA, from Wells Fargo, the average of all of these going through the third and fourth quarter of this year and the first and second quarter of next year. See, getting somewhere down 6.4%. Now, my personal opinion of this is we'll see a little bit better mortgage rate environment than what these forecasters are saying. I don't think they want to get bullish or want to sort of stick their neck out and say this is what's going to happen. But the bottom line is this will improve affordability for folks out there as we talk about home prices here in just a minute. But the truth is, markets are operating very, very differently across the country. Odetta Cushy said this: while there will be significant regional variation, the underlying fundamental conditions of the national housing market support a natural moderation of home prices rather than a sharp decline. So we're seeing moderating home prices right now. And it's certainly not equal among all areas of the country. You see this right here: less in the West and sort of South, more in the Midwest and up in the Northeast, more home price appreciation in those areas. And a lot of that's due to supply. We've talked about this. Supply in the West and the South has already recovered from pre-pandemic levels. And so that's having an impact on home prices. But if you want to see where home prices are ultimately going, you have to look at list prices. The bottom line is list prices have already flattened out. This is a look going back to the beginning of 2023. And you see sort of this sideways movement in the median list price of a home in this country. And that's interesting, right? As prices start to moderate, you're going to see list prices flatten out. But the bottom line is this is an even longer view look going back to 2017. This has been happening for the last several years. We've seen list prices sort of flatten out. The other thing that we can confidently look at here is that home price growth has slowed this summer. You see sort of a downward trend there. This goes all the way back to the beginning of 2023, so call it the last 2.5 years, and we're seeing less home price growth than what we saw in the previous couple of years. Now, I bring this up for a couple of reasons. I think anybody selling their home right now needs to understand median home price, the list price is flattened out. The home price growth is decelerating, slowing down, and the market is changing. You could say really that the market has cooled off, and I'll give you a perspective from Danielle Hale in just a minute. But I think being able to educate someone right now is our number one job. I was at an event and I spoke to an agent and she said, I like to sit down with somebody and says, has somebody taken 5 to 10 minutes to educate you on what's happening in this housing market? And most of the time she said, the answer is no. Somebody hasn't done that, and so I can step in there, this person saying that, and educate them. But Danielle Hale said this: the housing market has cooled modestly in 2025, but the extent and persistence of rebalancing really varies across the country, and regionally, home buyers and sellers are likely to experience very different markets. That goes back to the graphic that I showed you. The Southwest inventory has recovered from pre-pandemic levels, also seeing less price growth in those areas as well. So very, very different market depending on where you're at. I think the other thing that most people are wondering right now is what's ahead in this real estate market. And, I was at the Tom Ferry Summit here just last week as I'm recording this, and his message in his first session was every drought ends in recovery. Every drought, every tough time in our business ends in recovery. And where that came from is we did a study with Tom and went back for the last 6 decades and said, okay, what happens in the market when things start to sort of downturn? And I think the impact there is something we want to pay attention to. And there have been several downturns going back to the early 80s recession, mild recession, early 2000s, the dot-com, then 2008, the great financial crisis, obviously COVID. And right now we're in sort of this drought and downturn. I think being able to say, okay, this is what's ahead is what we need to sort of be mindful of as we go throughout this time. This is what this looks like graph going all the way back to the 60s. Median sales price in each one of those arrows in a time where things slowed down or a recessionary period or some sort of event in the far right, the top arrow there is where we stand today. Right? But you see this upward trend. Every drought, every downturn is in a recovery. This certainly isn't the first slowdown that we've seen in the real estate market. You've been in the business for any number of years. You're used to this. You've seen it. But just to kind of go back, you take the early 80s recession, 4 million homes being sold down to 2, 50% sales drop, took 4 years to recover. The great financial crisis, 7 million home sales drops to 3.5, 51% recovery, takes 3 years to recover. And you see they're on through COVID and present right now. But these downturns lead to recovery. Don't be mistaken about this. The question is, how long does it take? 4 years, 3 years, 8 months? You see it right there in the middle of the screen. What's happening with home prices, what's happening with mortgage rates. Right now, we're in a sort of flattening home price trend and a slow but downward trend in mortgage rates. The old saying that when mortgage rates go up, they take the escalator. When they come down, they take the stairs. That certainly is true today and what we're seeing. But what are the expectations for sales? If you look at home prices right now as a leading indicator, this comes from the Home Price Expectation Survey. Every one of the forecasters, whether they're pessimistic, optimistic, or they're widely optimistic, they all point in the direction of up. Okay, so as we go through the next few months and we start to turn the corner into 2026, you should expect that home prices will continue to rise, although at a moderate level, and that will be something as we turn the corner that you look to, okay, we're coming through this. The recovery is actually expected to begin going into next year with forecast right now, as of right now, that we'll sell about 4.5 million existing homes next year compared to about 4 in the last 2 years. 2024 and 2025 was projected for this year, right about 4 million existing homes. The bottom line is every downturn, every drought ends in a recovery. We've got the data to show that. My hope is that if you lead a team, you can share that with them, you can help them understand that is absolutely true. I want to do something for a second. I'm going to pause for a minute and turn it over to Kate Rezebeck from our team. She is going to talk about the most important conversation you can be having right now. Oh, by the way, it has to do with builders. You're going to want to pay attention. I'll turn it over to Kate.
If you've got buyers who hit pause over the last few years or move-up sellers still waiting for the right home, this is the moment to check back in. Because what's happening in the new construction market right now could be the opportunity they've been hoping for. You see, builder incentives are back in a big way. In fact, 66% of builders are offering them, from rate buydowns to upgrades to serious price cuts. And nearly 4 in 10 are dropping prices. The average price cut on a new build right now is about 5%. And if you do the math, that's $25,000 off a $500,000 home. Let that sink in for a moment. But your buyers may not know these options are out there. And if you're worried they'll go straight to the builder without you, just start the conversation first. Because you're the one who can guide them through the choices, the financing, and the real math on what's truly affordable. You can help them find the right fit they didn't even know existed. So use this playbook to help them see what's possible. Send the email, share the visuals on social, make the calls. You know how the game works. And now's the time to roll up your sleeves and get the work done. You've got all the tools. Now let's go start the conversation.
All right. Thanks, Kate. Grateful for that. And my hope is you can use that information to go out and have great conversations right now. But, as we wrap up this September monthly market report, we do it for this reason. We believe most agents know what's happening out in the business. Good agents understand it, but only the great agents can explain what's happening. My hope is that you can explain what's happening in the economy and its effect on housing. And you also can explain that while we're in this drought, this downturn in the business, it always ends in recovery. Always thankful for the support that you give. Keeping Current Matters for watching the monthly market report. And we'll see you back next month.